Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to show you every single stock that I own in my WealthSimple account, update you on recent changes to my stocks portfolio, and my two new stocks that I recently bought during the last month, the dividends I received in the last 2 years of my investment journey, and the overall return of the portfolio in this downturn. In the last month, we went through a roller coaster ride in the market with lots of ups and downs, and of course more downs, and my portfolio of course saw lots of fluctuations too. The dollar value of my own portfolio at the moment is around $54,500, and our combined grand portfolio of me and my wife worth around $66,000 today. I mentioned this before, but a lot of finance-focused YouTubers don't like to share their portfolio performance when we are in a bear market, and everything including index funds are in deep red, as they think they will look stupid in front of their audience, and they only want you to see their portfolio when everything is green and we are in a bull market. I think it's very important to actually share the portfolio performance when we are in a bear market and demonstrate the process of long-term investing here. I'm actually excited about these dips in the financial markets, as I can accumulate more shares with the same amount of the money that I invested every single month in my basically brokerage account, and bring down my average cost down in the companies that I think they are undervalued. In this channel, I don't tell you what stocks to buy because I don't know about your investment goals, your risk tolerance, and your financial situation, but I will tell you what I am doing with my own money, and I show you the process of evaluating different companies. So if you like to see how I evaluate various companies, see what I am buying and selling every single month, and see the performance of my portfolio in the long run, make sure to subscribe and hit the like button so this video can reach a wider audience. I used pretty much all of my investment in 2020 to buy a house, and therefore started this new portfolio in January 2021 and slowly dollar cost average into the stock so that I found them undervalued or fairly valued, but with a great quality. I will try to update you every single month with full transparency and show you the exact performance of my portfolio and also my wife's portfolio, which we consider them a one grand portfolio. So yeah, I first just want to start with the asset allocation. This is a nice graphical representation of the stocks that we hold in this grand portfolio. Aritzia is still the largest position in our portfolio, but Google, Meta, and EQ Bank are pretty close to Aritzia, and they are closing the gap. These four companies in total make almost 60% of our stocks portfolio at the moment, which shows how much I believe in these companies and how much I am concentrated in these positions. In terms of the sector allocation, financials and tech are our largest holdings, followed by consumer discretionary stocks and REITs. You see a new sector here, which is consumer staples, and this is a new sector in my portfolio. I added two stocks in this sector to my TFSA in the last month. The two new stocks that I bought are Allocation, and Canadian Tire. I know they are extremely boring businesses. They are not exciting like Tesla or Nvidia or Shopify, but boring is always good in investing. And if you look at the fundamentals of these businesses, I believe the boring companies like Couche-Tard are much better businesses than these exciting tech companies. I will talk about these new additions in more detail in this video. I will try to balance this portfolio in the next year by adding to my smaller positions like Killam, Couche-Tard, and Canadian Tire. This is the dividend tracker I have in Excel, and as you can see here, the amount of the dividend I received in the last 2 years from January 2021 to this day increased every single quarter. Q1 2021, I received only $25 in dividend, but 2 years later, in Q4 2022, I just received $305 in dividend in 1 quarter. The dividends I received almost 10x'd in just 2 years, which is absolutely amazing, especially when you realize that all of these dividends are tax-free as they are inside my TFSA. I believe in 2023, I can continue to grow these dividend payouts as my current forecast tells me that I should expect to receive $1,315 in dividend in 2023, which is almost 30% more than that of 2022. And this does not consider the effect of the dividend compounding, the dividend growth of the businesses, and my additional deposits. So overall, this is the trend that I like to see with my dividend stocks. Okay, now let's look at my personal WealthSimple account, excluding my wife holdings in her own accounts. Overall, I have close to 54,000 Canadian dollar worth of stocks in this account at the moment. My TFSA, which is mostly Canadian companies, performed okay in this bad market, and it is only down about 6%, which is not good, but overall an okay performance compared to the overall market, in my opinion, which is down almost 20% year to date. I analyzed pretty much all of these stocks before on this channel, and I will leave a link to those videos in the description box below. In the US side of my TFSA, there is no change at all. Google is the only position I hold here, and as you can see, I currently own 50 shares of Google in my TFSA, and it is basically flat at minus 1% performance so far. I bought 7 more shares of Google in the last month in my RRSP, which I'll show you in a couple of minutes, as I think Google valuation is absurdly cheap at the moment, and I want to add to my Google position in RRSP at this price again and again. On Canadian side of my TFSA, I had a few major changes to my positions. I bought the dip on most of my holdings and also added 2 new small positions in the last 4 weeks using the dividends I received, a bit of new deposits, and a few stock trimming. So let's talk about the trimming part first. A spin-off of Brookfield company completed in the last month, and as I mentioned before, I was not interested in holding asset management portion of the company, and therefore I sold the spin-off portion of BAM immediately basically, which was 30 shares for me. In addition to that, I trimmed my Killam REIT position. I still hold 50 shares of Killam and want to add to this position in 2023, but I saw a few great opportunities in my other companies, and that's why I trimmed Killam, which held pretty well in the last month. From these 2 transactions, I was able to raise a pretty nice capital to buy the dip and also start a small position in 2 new companies that I think have good valuations at the moment. Let's talk about the first company, which is Allocation Couche-Tard. Couche-Tard is a company with more than 14,000 convenience stores and gas stations around the globe, which has a fantastic balance sheet and excellent growth potential. I started a very small starter position in this company and bought 7 shares in my TFSA. I plan to consistently buy more shares of Couche-Tard in 2023 and scale this position up to at least 5% of my TFSA. Next, we have Aritzia, which is a growth-based Canadian fashion stock, and I'm up almost 5% on this position at the moment. I bought 10 new shares of Aritzia recently. I think it was 2 days ago. I think it was exactly on Friday. And now I own 90 shares in my TFSA. My wife also holds close to 140 shares of Aritzia in her TFSA. And overall, this is our largest position in our grand portfolio, which is a surprise because I didn't anticipate that Aritzia will be able to perform so well and post those amazing revenue and income numbers in a bear market. I want to increase my ownership in Aritzia, and my goal is to buy at least another 10 shares to have 100 shares of Aritzia inside my TFSA. The next position is Brookfield Company. The spin-off so far was not really great for Brookfield Company stock, as I'm done almost 20% on this position at the moment. I bought 10 more shares of Brookfield Company after the spin-off by selling my asset management shares, and I want to buy another 20 shares of Brookfield Company, as I think the company is undervalued right now. At that point, after I buy 20 more shares, I will have enough shares of this company in my TFSA, so I would be done with Brookfield, I think, at that point. The next position is Bank of Nova Scotia, which is the 4th largest Canadian bank. I am down 21% on this position so far, which seems like a very bad performance. I just bought another 5 shares of Bank of Nova Scotia, and now I have my full position at 100 shares in this company. I don't have any plan to add to my Bank of Nova Scotia position at this point, and it's going to be a hold forever stock for me unless something fundamentally changes with their business. Next, I have another new position in my TFSA, and it is Canadian Tire. I will make a full stock analysis video on Canadian Tire soon, but I believe this company is extremely undervalued at the moment. I bought 11 shares of Canadian Tire and started a small position in this company and hope to be able to scale it up in 2023. Next, I have EQ Bank, which is the golden ticket of my portfolio. It is one of the companies that I believe will reach a new all-time high in 2023 or at latest 2024. They have excellent growth roadmap. They have fantastic balance sheet and business fundamentals They are focused to return value to shareholders, and they have great margins which are growing as well. The company is currently down only 3% in my TFSA, and I bought a few more shares of EQ Bank in the last month. Next, I have two REITs, Granite REIT, which is an industrial real estate company with many large warehouses around Canada, US, and Europe, and Killam REIT, which is a residential real estate company in Eastern Canada. Both are amazing REITs with both growth potential and consistent monthly dividends, but the reason I trimmed Killam and added to Granite is that Granite was oversold in the last 2 weeks, which in part can be related to the WealthSimple and Questrade email to customers about potential 10% IRS tax if they hold Granite REIT. I made a video about this tax and how Granite is going to be exempt from this tax, but I believe lots of investors are not aware of this and probably just sold their shares in Granite to avoid this basically 10% tax. I am down 13 and 17% on these positions. I bought 20 more shares of Granite in the last month and have planned to continue to add to my Killam position in 2023 as my target share count for Killam is 300 shares. So 2023 should be a year that I consistently buy Killam REIT. Finally, we have TD Bank, which is up 2.8% in my TFSA. TD is one of the positions that I will never sell it and just try to collect those juicy dividends and reinvest that cash flow into my other stocks. Next, let's look at my RRSP. I plan to hold most of my US stocks here. RRSP portfolio is down a whopping 32% so far. My biggest investment here is Meta Platforms or Facebook, which is down 57% with a terrible performance. It is a really scary number if you lose more than half of your investment, but this is only a loss on the paper, as I am sure that Meta will rebound in the future. It's definitely undervalued here. I also own 32 shares of Google in my RRSP, and I am down 14% on these shares. Regarding my RRSP strategy, I want to add to both Meta and Google here. And if I have extra cash, I will also want to add a new stocks here in 2023, as I think tech sector in general is extremely undervalued right now. That's a stock, that new stock is probably going to be Amazon. So overall, my plan with all of these stocks that I show you today is to hold or add to them during these dips. I did not panic sell any of these stocks during the recent market downturn. And even if we go down another 20% or 30%, I will still hold these stocks as I analyze each and every stock I buy. And therefore, I'm not going to emotionally react to price action of these stocks. These are my assets and I know the value of my assets, so I'm not going to sell them for low offers out there. There you are, guys. I hope you enjoyed the video and my transparency in showing you all the positions I have in my own portfolio and also the performance of our stocks. If you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching, and I see you guys in the next video. Farewell.